The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome to another gorgeous day at the headquarters of Technical Trading and Investing. It is TFNN.com. I'm your host, Carlos Danger, sitting in for the usual David White, who's a very nice, sweet, huggable guy. I guess I could say that. Anyway, we are here at TFNN, the headquarters of Technical Trading and Investing, yet on another day where we've got the market kind of headed out here sideways today, maybe a little down. My guess is that they're going to try to keep this up for the next few days. Of course, we are going into the fund buying season, and no fund should not be buying absolutely at the top. Like they say in the street, if you aren't buying the highest price, you just weren't trying. And that's at least what they say. Of course, it's normally other people's money and not theirs. So having a nice day out here. Volume is very light, by the way, 1.7. It's going to be 1.8, I guess, billion shares for the day so far. So it is going to be rather a light day unless we see a lot more volume coming in later. But I suspect that we've got a few things. We've got a little bit of fund buying sitting in the wings. We also have a bit of just waiting for Bernanke yet again. I guess there's going to be another speech next Wednesday. So, or more information coming from Bernanke about tapering. So they're going to be looking at that. But in the meantime, we had a rout of stocks reporting last night. A lot of them just getting smacked around like a redheaded stepchild, beaten like a baby seal. How many more could I come up with? I need about 10 of those colloquialisms to put. But boy, it was a bad time. What is it? A bad day at BlackRock. Oh, I added a third there. I'm gonna have to write that one down. It was a bad day at BlackRock for earnings after the bell last night. And when we go back and look at them, probably the worst of the bunch is Expedia. This thing, just wicked, 65 bucks. I tried to, this chart had been forever saying that it was going to fall off the face of the earth. But unfortunately, it's almost impossible to play these unless you play them on expiration day, because that's where the actual bad news comes in. It had been in this chart for a long time. People had been selling this, but they pushed it right back up. And of course, short interest or high short interest is always a issue with these. Because, of course, with high short issue, for a little while, they can always run these stocks up. Let's see which one. I wanted to look at that one. Off 25%, which has got to be some kind of record. I'm sure it's a record for Expedia for one day move either up or down. Last trading out at $48.36, 39 cents. But basically, this entire space, if you listen to them, is just getting stuffed. With just far too many people. And, of course, Priceline has been the big winner in this one, PCLN. And a lot of people starting to get a little bit nervous about Priceline up here also. Just a lot of people in this field, and they think margins are going to start falling. Of course, maybe Katie Keiko from the Big Bang Theory won't have the kind of pull that William Shatner had in pushing Priceline, but kind of hard to tell. In the meantime, this certainly looks like it could go back to the last gap, which is between 855 and what, 870, something like that. And it has all the ability. There was some decent volume up, decent volume down. Trying to remember when Priceline's earnings are coming, so let's look that up real quick. August 8th. unfortunately, all these stocks, they're holding up right into earnings, even if the stocks are weak. So it's very hard to get in just before. And, of course, you have to assume that these folks are going to tell the truth about their earnings. We've seen a little bit of stretching in some of these stocks, at least stretching the truth. But look for Priceline August the 8th. If their earnings are anything like Expedia, going to be somewhat a ugly matter. Other things that we've got going on out here, KLA 10 Core, kind of a false breakout. Been watching this one, talking about it, I think, on the show. And that was the January 25th high this year at 57.97, had 7.1 million shares. And when you look at the other side of this chart, when we were breaking out 2.7 million shares, 2.2 million shares, basically those were the highs. Now, of course, we've come down. Volume not all that much yet, but any close below 57.97 is going to be a long-term sell signal on this. And what was the low today? 57.94. So we got a few pennies into that today. The question is whether or not we can see that actually come back up. 58.38 right now. Doesn't matter, seem to matter how bad earnings are. We were looking at Amazon. AMZN. Of course, disappointing earnings, and what do? They go up. When you're trading Beanie Babies or tulips, reality doesn't have much to matter. You've got a bullish engulfing of at least 7 or 8 days out here. Of course, high volume into it like yesterday. But all these funds are in this thing. It is going to be the prisoner's dilemma. And when is this thing going to fall apart? My thought on that is the first day that they actually start posting profits. As long as they just say, well, we're putting all the money back into the company, how can anybody really figure out what this company's worth? My guess is that when they actually do start making money is going to be when this company actually starts selling off. In the meantime, it's a Beanie Baby. It's whatever you want it to be. And this is the stock that especially hedge fund managers and big funds like, because it doesn't matter whether the earnings are good or bad. It's whatever. It's a Rorschach test. It's whatever people believe it is. And bad earnings down, $10 last night, turns into a positive today. I think a little bit of this is a short squeeze. We'd have to wonder if this thing does close back below 300, if the idea that this is a stock that eventually does have to make money. The question is how much money it makes. Now, they were short on sales. I talked about this yesterday on the show, and that is what are the kind of sales, and are their sales going to come down because they are now collecting sales tax? If you're paying the same sales tax and it's a few cents more at Walmart, do you just not pick it up while you're there doing your shopping every week? And that is the question for Amazon. My guess is that the sales tax issue is going to hurt them a lot worse than anybody else has said. That being said, it doesn't matter as long as Wall Street says it doesn't matter. What's that part in the movie? Doesn't matter what the truth is. I tell you what the truth is. I think that was in Sniper. It's whatever I say it is. I'm a senator. The truth is whatever I say it is. That was Ned Beatty. That was Ned Beatty that was the senator. Of course, I remember him from Deliverance. Doesn't everybody? Woo-wee, squeal like a pig. Anyway, a lot of cultural references in today's show. Other stocks that we are looking at here, of course, SanDisk came out with numbers. They're down about 5%. And, of course, in Harmony, we've got MU. We'll look at it, too, but I had looked at it. This is down on volume. It is going to exceed the volume. It did go lower than the last major low, so we should look at it. SanDisk, of course, been making a lot of money because they make memory chips, and a lot of people are buying tablets today, and those memory chips are in them. And they've been doing pretty well. Anyway, the June 24th low, $57.11, 3.3 million shares. Of course, we've got down to 57.01, so we've pierced that low. The volume is higher, 6.7 million. What is it today? 6.7 million shares already, which opens up the next major low always, and that is at $50.68. Of course, having a little sympathetic pain out here is Micron Technology, and of course they have the same thing. What we want to be looking at is, did they pierce their low? 57.47 is the last low on July 11th with 890,000 shares. Pretty decent support at that level. I'm thinking they could get a little bit more down here, but today, is that right? Can't be 50 million shares? Yeah, I guess it is. 50 million shares compared to what was our low out here? 89. Yeah, 89 million shares. So not so bad so far. Micron holding up a lot better. Trying to remember when their earnings are out here. Earnings date June 16th. So they've come and gone. So it looks like they're good until September. Maybe that's it. Anyway, I was thinking longer term, Micron might be a nice buy. I was thinking or hoping that you could get back into this 1050 range, 1027, the March 22nd high. There's 2 days that go back to back with decent volume, and they were just around that $11 to 1050 range. That day is the 23rd of May. My guess is that this thing could go back in there, and on lighter volume would be a good buy. But you actually have to say, even this, the last low out here, this thing is going to find some support, and just 50 million shares against that so far today says it's not too bad. But my guess is enough volume here that I wouldn't be buying it today. But maybe next week the thing bases out and starts one more trip to the high. 1460 would be a nice trading range in this one. Yeah, you can't handle the truth. A few good men, yeah. Overused though, isn't it? You can't handle the truth. Anyway, but interesting. VeriSign, this thing, a little interesting. What else we were looking at? Wynn Resorts. A lot of these are repairing themselves during the day. Let's see. What else do we have? MU, Clack, STK, ST. Do I have that? No, I don't. Let's go ahead and add STX. Of course, Western Digital had their news out. Wasn't all that great. These guys, the same. Let's see, go ahead and take a look at the headlines on this. Down on fairly decent volume 2 days ago. I think that was sympathetic with Western Digital. Seagate says PC market has stabilized, sets its sights and future on cloud, mobile. Doesn't seem like a whole lot. Anyway, you can give me a call at 877-927-6648. That's 877-927-6648. We'll be looking at charts today, but look forward to your call.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rose, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Well, we've got cultural references running amok in the den today, and we'll leave it at that. Anyway, Western Digital, Seagate, both of these companies look like they are in trouble. They've come back to some support levels, but those support levels pretty much have some fairly decent volume. On Western Digital, WDC, what you want is this little gap that popped up on the 27th of last month, and that was the 2.6 million shares. Went into it yesterday with 5.3 million shares, getting a little bit of bounce out of here. But then when we look at STX, Seagate, the other big hard drive manufacturer, this thing, of course, blew away its low on just monstrous volume 3 days ago, or 2 days ago, however you want to look at it. We're coming back into those lows, but certainly has the $38 gap with high volume is where this thing might probably land on any kind of pullback. So very interesting out there. Xilinx, we talked about Xilinx and not having as much movement as you would think this thing would have. Let's take a quick look at the headlines out here. But some nice movement out here. Xilinx needs not a whole lot. Altera, actually, the sister company, does the exact same thing as this one. Had weaker earnings out here, I don't think you can make as big a case on this one as you did on the hard drive manufacturers that have come back hard. Of course, we had some earnings out in the housing industry. These things probably recovering a little bit after yesterday's moves. I think I actually have... let's close that, close this. Got to do a little housekeeping every once in a while on the air. Let's see what we have here. I wonder what the deal is on this. This machine is messed up. Okay, my portfolios. There it is. Come on. There we go. And we've got home builders. Okay. Now everything's working again correctly. So what do we have? Price changes out here. Not so bad as one would think. They're all bouncing back a little bit. KBH up 3%. Let's take a quick look at that one. KBH. And if I can actually KBH type it correctly. So what do we have here? They had the light heavy volume move down yesterday, and of course a nice pullback into this. But you've got to figure the $16.67 low is going to get retested. Of course, this has been we've been talking about this for a couple of months. Boy, did these stocks look tired at the top. The question is whether or not these things have come back into their lows. Now, in KBH's instant, you have a February 25th low at $17.13, 3.7 million shares. We blew that away, and of course, they ain't going to close back up above it. But you had 10 million shares yesterday, so that low is fairly much blown away. Let's look at just a little longer time frame, which opens up the $13.09 low. Which, boy, that would be a pretty wicked pullback. My guess is a lot of people still want to buy this, and they'll probably be buying it, which means it's probably going to go sideways for a while. No reason to go out here jumping up and down on these. I guess all these probably, Ryland's up 1.7%. KBH is up 2.6%. Toll Brothers pretty much flat. Hovenia flat. Lennar flat, so don't have a lot. Of course, 50. What do we have there? Not really getting a lot of clues from these either. Probably more issues with other things going on in the marketplace. Let's take a quick look at gold. It's been up, it's been down, it's been all around. Right now, it's down $7.30 going into the weekend. $13.21. Excuse me, $13.21.70 on the price of gold. Don't mean to scare you out there. Off 35 cents on silver, off $25 on platinum. So, not a whole lot to jump up and down just yet. Gonna have to look at UNG here. This thing's starting to come back in. We'll look at that when we come back. Give me a call, 877-927-6648. That's 877-927-6648.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And welcome back to the Power Trading Hour. And, of course, you can give me a call at 877-927-6648. Did want to thank one of the dinners yesterday. I don't know if I got it on the air, but we had some discussion about where lithium came from for lithium-ion batteries, and the supply was, I think, 36% out of Chile. But I think that China does not have a death grip on that, and Chile has a fairly decent control of exports and setting the price on lithium, the metal. Pretty hard item to get because I think it's explosive in water, isn't it? So it's one of those things that you have to, kind of like sodium, well, it catches fire with water. I'm trying to remember what the lithium does. But anyway, I digress. We were talking about UNG, and I've been talking about it for the last couple of weeks, about this is a pretty good time to figure out where the lows come in the summertime. In the next week, 3 weeks, most of the power generation companies across America will be signing contracts. My guess is, especially with the new EPA director, who probably even more vigilant against coal companies, we can see probably a huge amount of this. Now, I guess the upside is going to be this kind of thing's not going to make much sense if the pipelines don't open and natural gas isn't able to flow a little bit better. But my guess is that that will be approved, and the other side of that will be forcing most, if not all, of these power generation stations to get off coal. When the current president took office, there was some 450 coal generation power plants. That's down to about 170, 160. And they've got their sights on the rest of them. And of course, those get refitted to use natural gas. The question is, how do you get that natural gas to them? And of course, that's where everybody hates the pipelines, because of course, pipelines do nothing but kill people. I was killed my parents were killed by a pipeline. I was molested by a pipeline. The truth is, their pipelines are probably the least problem of any kind of infrastructure. It's easy to run them around towns. So many more trains go by populated areas, and the chances for those trains to have big issues are 1,000 times more than a pipeline. So to me, it doesn't make a lot of sense of bypassing that. I suspect, though, that pipeline issue will also mean a lot more demand. But those two things are probably going to come in line, I would say, in the next 3 months, because they need to start doing them now to get this on the road. Anyway, we're looking at natural gas, and of course, like I said, normally this is where you find the lowest prices of natural gas the next few weeks. They tend to spike because, of course, if we do get a hot spell, especially in the Midwest, where a lot of natural gas power producing is capable by just flipping a switch, you'll see that natural gas starts getting used. So it's not uncommon to see a nice little blip out of the August time frame, a little bit of pullback as the weather changes and the air conditioners are turned off into September, and you get into October, and then normally till March you have a bullish bias in natural gas. What we've been looking for is this nice pullback into these gaps. There are two of them, one at 18 to 1840, and then like 1860 to 1880, 1890 on the UNG, which is the natural gas fund. We're basically into that today. The volume is going to probably be lighter. We'll wait until the end of the day to see how this actually plays out. But you've got a nice 11 million share day out here that set up the last major low into this foray. That's where I was thinking we were at least going to get a test of that. That is the June 28th low, 11 million shares at 1869. We haven't touched that low yet today, but I suspect we could get back into that. So starting to look at natural gas. Again, normally these summer lows have a nice little blip, but it's not much. I suspect we're looking for the huge move in natural gas, and that is from the around $4 range up to maybe the $10 range at a high, and a big move that you could have. And it may be something like the Keystone Pipeline not being passed, and the verdict or edict from the EPA of shutting down all the coal-fired plants. Maybe they're moving natural gas to those plants by car, by camel, any means necessary to get them back online for the winter. It's hard for me to believe that a politician would approve that going into a cold winter, but worse things have happened. Anyway, those two gaps are open. We are just touching the top of that gap now, but it's time to get your spidey sense up. Hey, another cultural reference. I'm going to see how many I can fit in before the end of the show today. Anyway, get your spidey sense going and look at these two gaps. Ideally, boy, we'd get a test of that $17.65 low with 11 million shares, and that would be back that February 14th low of this year. And boy, would that be sweet. That would set up a huge, nice trading range back up to that 2409 and possibly higher. So I've got to keep a keep that. Let's see. Here we go. Anyway, okay, what else do we have moving out here? Yahoo, of course, this thing came off heavy volume when one of the big brokers that pushed the old CEO out put a new one in, and basically sold all his at $29 and more when they were in at about $16. Dan Loeb. And you know what do we have in this? This thing's kind of been moving sideways for the last few days. My guess is maybe this is like another cultural reference, As Good as It Gets. What is it, about 2005 movie? Anyway, As Good as It Gets. Got a doji out here today, and I suspect that sets up either the halfway move down or a trading range. Yahoo's earnings are wind. Earnings date. October 21st. So we got a bit of time out here for Yahoo to keep on going. And of course, when you look at it here, the last major high, June 10th, was 27.12. So we got about a dime off of that on July 23rd. Could we just get back into that level? You did have 25 million shares, just a dime over that high. That would make me think that we probably at least have at least one more attempt back down at that $27 range. But I have a feeling a lot of the juice is out of Yahoo now, with the premier guy that was pushing it, Dan Loeb, exiting stage left. Of course, he got all his money and more for putting this all together. Of course, we were talking about Herbalife coming off the top, another one of these that is an operated stock. A little pop out here today on light volume, but I'm going to be watching this one also very closely. It has yet to close under the 9-day moving average, but this could be yet another setup for these stocks to just basically fall apart. You'd like a close below it, a close back above it, and then a close back below it to signal the end of the move of some of these stocks. And it still says that at least a few of these are a little farther off. And of course, the question is whether or not the government is going to call this a pyramid scheme. There is an investigation underneath it, and wouldn't that be interesting to see that investigation actually come to life? King Carl, Icon, of course, driving this and driving a few other Netflix, but he's been able to do something. Of course, this is not a insurmountable move out here, but the question is whether or not the reality of Herbalife being a pyramid scheme, when 80% of all the stuff it sells ends up in the distributors or their dealers' hands, doesn't really bode well for a company like this. And could it be considered a pyramid scheme? I think the answer is yes. Doesn't matter how good the products are; they can be wonderful. The multi-level marketing, no matter how it's done, is pretty easily demonstrated with a spreadsheet that it follows the power law, and that is that 90% of people will only break even or lose. Only 10% will actually see any kind of meaningful earnings out of them. And of course, those are the people that were in on the beginning, on the ground floor, as they say. Let's see if any of these others out here actually giving any kind of we're looking at Whole Foods, and kind of interesting. This thing has it looks awful stretched up here. We've got a giant gap back here. The question is, when does that gap get filled? Lots of volume, and that's where you'd want to be buying this thing. But take a look and see what earnings are on Whole Foods. WFM if you're looking at it. But for a grocer, kind of a parabolic chart in my opinion. Okay, so we've got Whole Foods on the 31st, which is next Wednesday. So a few of these others, but and not getting a real clear signal. Last time this thing did have volume, though, was the 8th of May, and the 8th of May was 17 million shares. So you'd expect this thing probably to come back into that $50 range. Let's take a look and see what's going on in the rest of the world. In play today. Wanted to go back and look at it. Did we talk about SBUCs? Don't think we did. This is one of the ones doing well today. Of course, it looked like it was very weak going into earnings and a lot of selling. This thing it did surprise with its earnings and, of course, breaking out and with volume today, $73.52. And you got to say that's a breakout. Of course, if it comes back with light volume, you want to probably be looking at this thing at the $70 level. But it's got a sign of strength, which is a huge move. You probably like to see the candle a little longer. The question is whether or not you get any follow-through or this just comes back and fills the gap. That's been the problem of a lot of these stocks that have shot higher. International Business Machines is an example of that one. You get the huge spike, and again, when you look at that candle on earnings, which was on the 18th, do you see a full candle or you see a spinning top? And that is it. You want to see a nice big candle like the day after that, but of course to the upside. This one's to the downside, and your volume just went lower. And you had decent volume. This thing is still trapped in that candle of the 19th, and very little to suggest IBM can get out of its own way. We're going to look at a few of the other ones. MSFT. Talked a little bit about this in the Tech Insider today, tangentially. But the problem with, or maybe the thing you need to be watching, Microsoft is at its level back to $30. But just a hint of what I was talking about in Microsoft is that we are seeing activists, much like we saw Icon move Netflix and some of the other stocks he's in. We are starting to see stock activists getting into Microsoft, trying to kick out Steve Ballmer and split up the company if he is not able to throw out, or if they're not able to throw out, at least split up the company and release some of the money that's been in this company for a while. They don't like the fact that this thing has been up and finally broke out. And, of course, the first thing that Ballmer does is throw a lot of cold water on it by missing earnings. But the idea is that this may be a very volatile stock in the near future on headline news, so be very wary of this if you are trading it. And that is that there are activists out there trying to form pools, enough stock to supplant the amount that Ballmer and what's his name? Now I'm having mental blank. Maybe somebody then can tell me. I'll think of it during the break. Why can't I think of his name? Steve Jobs. Oh, Bill Gates. I guess it's the mind just going, isn't it? It's probably too much disco music. In fact, if he plays a disco music coming in from this break, I will have to set a line in the sand.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
That makes people come up, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
This ain't no disco. I ain't fooling around. I'll guarantee you that one Pink Floyd album is worth more than every disco song ever written. No matter how much Disco Steve, and literally he is Disco Steve. He got his shirt right out of 1979. Unfortunately, it was off a dead person. So, anyway, what else do we have going on here for the end of the day? Just to watch, I wanted to check back in on volume here. So let's just take a quick look on this. We're just, this machine is doing some funky things here. There it is. The redraws are just a little tough. What do we have here? Okay. Yeah, we're up, 1687, but we're just turning 2 billion shares right now. So the question is, what are you actually going to get into on this? And the answer is, if you looked at the bloodbath last night of stocks not making earnings and everybody coming right back and buying them again, the idea, I guess, is that you've got to buy these stocks anytime they are on sale, and that no matter what happens, we're going to have a big fourth quarter. And I think that's a lot of assuming to be doing. I'll have to write that one down, too. A lot of assuming to be doing. Anyway, we're looking at some of these other stocks. Take a quick look at Intel and how we have some. These did miss, theoretically. And, of course, they came off with decent volume. We've got a lot of these being defended. I think what we are waiting for right now is Bernanke on Wednesday. He's going to come out and he's going to speak just a little bit more. We're going to be at the altar of the never-ending quantitative easing, and it's going to probably be his comments that set up the rest of the summer. I've talked about what's his name, Vernon Smith, and his original tests with real money, by the way, for traders, and how they always ended up, even though when they told them the party was going to be over, people played until the end, no matter what. He won a 2002 Nobel Prize for his economic studies. And he actually did it in Chicago, I believe, the University of Chicago. Even was able to get to floor traders. Told them everything. This is going to last 2 hours or 4 hours. Here's $200. You get to keep whatever you make in this. You get to walk out. This is a zero-sum game, so you get 20 or 30 people. Some of them real traders, some of them not. Didn't matter, though. Almost every one of them traded up into the last moment, and then everybody tried to get out, in which case the markets crashed. And no one walked away with much of anything because, of course, you needed to get out before the end to keep your money. And that's unfortunately why almost all, or at the end of a market, it brings in the most amount of money. It just brings people in. And, is this it? I can't tell you for sure. The one thing I can tell you, though, is that we have entered a bubble in the markets, and I suspect Bernanke is doing this dance, which is I can't let the bubble go on, but I can't tell people that the bubble's over. And maybe I should just wait until next year when I'm getting out of here, and it's not my responsibility anymore. Maybe it's Larry Summers, maybe it's somebody else, but it's not going to be me. So maybe it's just a hot potato. Maybe he's willing to let this thing go into overdrive and let him go out at the market at the top. But we'll probably not know that till Wednesday, and I suspect we're probably in a little trading range, and of course fun buying for the next few days. So I suspect we'll be going sideways for a little while longer.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.